If you were among the few who caught my last video on identifying trap traders, chances are you weren't caught off guard by the market's recent moves this past week. There was setup after setup of tradable moves, incorporating the closing price and the idea of trap traders. Maybe you were prepared to avoid the traps, or maybe you were able to frame a setup to take advantage off of it. But if you didn't, don't worry. These schematics repeat again and again. So let's talk about ES. Again, this is based off of a 3-day setup, first red day, based off of what Stacey Burke talks about. I've adapted it to my style of trading, which is a higher time frame. I don't like to go live on the lower time frame, although you can with this very much so and do very well. But it's just a little bit easier for me to use higher time frame and stick to not only executing on higher time frames sometimes, but to use confirmation signals that I'm seeing on the 4-hour and 3-hour to validate what I think I'm seeing or not seeing. Because I think sometimes if I'm stuck on the 15-minute, it's easier to miss certain things that are easier to spot on the higher time frame. So if we look at ES from this past week, on Monday, new month, new week, the market punches up above this high. And not only this high, we have 3 straight days of longs in the market. So breakout above this high on Tuesday. We have 1 day of longs in the market. Now we have this high on Wednesday. The market trades higher on Thursday. And then again on Monday, because Friday was a holiday, we go to Monday and we have another breakout to the upside. So anyone who's buying and possibly trailing stops below, notice how the lows are unswept, untapped. And so more buys are in the money and their protective stop orders, sell orders are below here. Now, the market closes on Monday as a first red day. I'm going to do a more in-depth video on first red days, first green days for ICT style traders because I think it would be really helpful. It reduces just a lot of the noise and you can still use concepts that you're familiar with, which is what I do with imbalances and certain structural things. But we have a first red day sell setup opportunity. And the point of a first red day is that you first need volume trapped up high. So you have this spike. We've already mentioned how longs have been in the money. And especially up here, we have volume trapped up here that then when the market breaks down, all these traders above this level really are trapped. So give a little box like that. Let's get rid of some of these other lines. So what that means is anyone who's buying here is buying too high. Once the market collapses and closes here, we have a daily confirmation. This is what it looks like on the daily. It's a daily engulfing. You can see the engulfment and these 3 daily highs that had been taken previously. And what I like to do, one of the things that I do, is I will take the last 3-hour or 4-hour candle, this consolidation into the close. So Stacey will say end of day consolidation. That's fine too. That's basically what this is. It's just a way of being a little bit more kind of mechanical about it, although there is some discretion as to how to mark this out and how to use it. And what you'll see is one of these schematics playing out. So either we'll have this continuation, expansion day, we mark out our closing price. We'll have some sort of consolidation, whether it's kind of around the closing price level or above it or below it, and then you'll get that continuation lower. Now, the other possibility could be something like this, where the market accumulates and then breaks out, pulls back, and now everyone below here is trapped. So how do we know which one it's going to be? Well, I like to use this sort of consolidation window as a clue. Now, I have a pretty good indication just from the preceding price action that it's more likely to come down here after trapping volume up high at the beginning of a month to at least go below this low. And then obviously we have some levels here that price ultimately hit. But I want to see how price behaves in this consolidation window. Now we have our closing price right here from this down day. So we want to see if sellers are going to come in and push price lower and defend this close. And so there's a few ways to look at it. Now, sometimes we might get raids of this opposite side of the consolidation window. I like to look for those, and you'll see some examples of that. The other thing I like to do is look for a 3-hour or a 4-hour breakout of this consolidation window, retest of it, and then a continuation. We didn't get that here. So you would have had to enter kind of from a more anticipatory framework. Now you can look at this as a rejection off of closing price. We could look at the 15-minute and say, we've got this horizontal consolidation, Asia range, Asia highs are spiked. I like to use imbalances where I see we have a bullish imbalance created that takes these highs. It's respected momentarily, coiling here, and then invalidated here. So we break down here. So this could be the best sell signal for me. I didn't take this one, but I'm just illustrating what the opportunities were. This was at London, 5 a.m. New York time hour. Towards the end of that hour, we get the failure here. And we get a big vertical move after that, which is what's great about these setups. It's all about finding these parabolic moves that move stress-free in your direction. Now, what's happening down here? Anyone who is shorting up here, the buyers are trapped up here. So sellers are in control of this market. Where are they likely to take profit and offload their position? Well, the market did pause here. So what's going on to the left here? Well, we have this prior consolidation here. How do we analyze it more thoughtfully? Well, we can look and see that we have this rally on this particular day from Tuesday, March 19th. That closes here. So anyone buying this close is possibly going to defend this level again once it comes back down into it. Not only that, we have sellers that are trapped here. Why do we have sellers that are trapped here? I interpret it that way because we have this resistance supply area, whatever you want to label it as. We have sellers possibly selling this level again. Once those who are in control of this market push through, it triggers many people who have buy stops above this high, and that's why you get a very quick move. It's a cascading effect where shorts are exiting as fast as they can. Not because it moves so fast, a lot of them can't get out at a good price. A lot of them are stuck, and so sellers are trapped here. Now we have, and then because they're trapped here, they're looking to buy out of their position. It looks also like a clear demand zone. So new buyers might be coming in who are looking at this market and say, where should I buy? Well, this is a pullback to a demand. And we have a rejection. And we have sellers who are looking to, like I said, find logical places to cover their shorts. So it's towards the end of the day, you get a reaction off of the level. Now, was there an entry here? There absolutely was. One of the entries that I like to use is, again, similar to this. It's the same type of entry method. We have a imbalance that gets flipped. So we have this bearish imbalance. If price is bearish, it's going to respect these imbalances like it did here, above here. It traded up into it because it wanted to continue lower. Then it hit this area, this logical area, bounces off of the imbalance, but buyers are stepping in. We can see that by this push above the imbalance, and we're getting a flip of that imbalance and then a rally into the close. However, we now have a down day overall. The market still has a bearish tone to it, if you will, after this Tuesday. We've had 2 days of expansion to the downside. So logically, you would expect shorts to be selling possibly too low, selling the close. Shorts are selling this move, trying to get in on possibly a market top. A lot of people try to pick tops. What we get the following day is a trade setup like this. Let's go and break it down. Now, in this particular day, it's pretty clear, obviously, because we've got the closing price. We can mark out our consolidation window. And so, of course, we have no idea. Let's say we were looking for shorts here because we had another, I have no idea. It could go lower here, but that's why I like to look at this consolidation window, this final 3-4 hour candle. I love it when it looks like this. It's a lot easier for me than when you have like long wicks and stuff. And I'll show you some examples of those if I can, but a nice consolidation candle. You can see how the market spends a lot of time in Asia and London consolidating in this area. And so if we were to continue lower, I would want to see, ideally, either a raid above this high, rejection back down, or a breakout, retest, continuation lower. But what does the market do instead? The market, now we can see this just on the 4-hour time frame, raids the low, tries to go lower, rejected back up, breakout, with the news trapping shorts. Anyone who's selling here is now selling too low. They probably want to get out of their trade with a buy order. Market comes back down. It doesn't always do that. Notice how here it doesn't come back because it wants to put more discomfort and pain, I guess, into the buyers who bought up here. It doesn't want to let them out at a break even. Here, it does let traders get out at break even. Why? I can only guess, but if it's letting sellers get out here, maybe retail Rick is selling the close here or somewhere in here expecting for a continuation. Those who really want this market to move down, which we can see happens on this Thursday, probably doesn't want a lot of sellers to be in the trade. So it lets them out at break even, but this could be a buy trade, as I discussed here. It lets them out, comes back into the consolidation window from this down day from Monday. Rejection of the highs. Notice how it didn't hit the high here of this consolidation window. It just dumped. Market comes back out, now hits this level, pokes barely into this. This is what I like to see, where it either doesn't come back or it barely touches it and reacts because people are trying to exit their longs from up here. Barely reacts to it. Also, we have this bearish imbalance right here, 4-hour imbalance. Market trades into it. Nice rejection, big sell-off. These buy orders got cleared out here with this candle. So sellers who sold too low, and then we have a collapse. So that's what I saw pretty much on ES. I caught this move here, this long here. Now let's look at it kind of a little bit more closely here on the 15-minute chart. Look at the price action here after this large expansion day, right? The market is kind of digging a grave, not to be morbid, but it's pushing price lower, it's digging lower, digging lower, digging lower. And so this looks like some sort of continuation pattern, possibly setting up for a downside move. But again, we're looking at closing price. This is closing price. And look again how the consolidation window low is being protected, being defended. And then, this is a riskier buy here. You could take this trade. You could see this imbalance come in. I wasn't awake during this time period, but when you get the news, this news pump, now it's sort of closed the lid. It's kind of dug the graves, and now it's closing the coffin, basically. And all those who are, this is where the volume is. This is short volume trapped here. The market then revisits it, and like touching a hot coal, it just repels away from it. So once I saw this move, it looked pretty scary. But once you see this close up here, I took this trade and into the close for a very simple scalp. Continued into the next day. I would have loved to have seen a crazy move like this, because I thought we were going to actually, when we first broke out of this range, I saw that shorts were likely trapped, and I took a buy here because I thought that we were just going to go straight up into this prior area of where now longs were trapped. Why are longs trapped here? Well, just market psychology, we can see we have this support area, right? This is a demand area, and there are some buyers who see this as a discount buy. But of course, the market is very heavy at this stage from trapping buyers up high, up here. Anyway, what ended up happening is I loved how this reacted. Even this one didn't come close to this. That's how I thought that, okay, market's trapped. It's going to keep going. But the warning sign for me to get out of the trade early was seeing how, and this is why I love to use imbalances, is because this should not hold price for very long. I was fine with this for a few candles in here. I thought it had a good chance of consolidating and then pushing up out of this. But once we got this basically rejection of the high here of this imbalance, and then a push out of it to the downside, I pretty much just moved my stop to break even here and got taken out at break even. So it did come down, and then at first I wasn't sure what was going to happen here, but once I saw this be respected, this was a nice long opportunity, like I said, into the close. I wish it had gone up the same day. Would have been a crazy move at the close, but it didn't until the following day. So that was ES on Wednesday and into Thursday. We got another big dump down. Now I didn't trade this because I caught some other moves on Friday, and this one doesn't give me a 4-hour or 3-hour consolidation window. It kind of does up here. So to me, maybe this is the close. It's the same concept, but it just doesn't fit my rules for what I like to see. But, maybe you use a 2 or, you could use, to me, a 1 hour is not the most reliable signal, but it's the same principle of big expansion. Traders are shorting too low. The market pushes up. It's a squeeze now. We get the rejection, and then we get a short squeeze higher. So again, this is not something that I would have traded. And I'm just curious what's going on here. Why is it reacting off of this level here? All I can see is that we had a down move here, big expansion dented to the downside there. We have this closing price area of a consolidation window. Didn't quite reach anyway. So again, this wouldn't have been a great long setup for me for a variety of reasons. But I just wanted to outline that the same basic principle is playing out again and again. This is how the market dumps and pumps and pumps and dumps. So that's it for this video on ES. I just want to keep these short, do a little case study on this. I'm going to pump out another video, kind of a part 2 for this week right now about some other opportunities. So that's it for this, and we'll see you on the next one.